Welcome to Close of Business. I'm Alicia Barry. It was the week investors lost faith in the United States. The Sell America trade caused whiplash on Wall Street and took Australian investors on their wildest ride since the pandemic. But by the end of the week, we were back where we started. The ASX 200 index losing just 1/3% and the All Ords basically unchanged. The market's down around 6% for the year so far. Gemma Dale from Trade joined me as the market wound up. Gemma, bond market investors have been selling out of safe haven US debt in a rebuke, it seems, of Trump's trade policies. Do you see shades of the GFC here?
It's a really tricky question. I mean, the GFC was an ugly time, and it's worth noting that the first real tremors for the GFC were felt in 2007, very late 2007, again in early 2008. Things started to really crack through 2008. Peaked in sort of October, and then the equity market didn't bottom out till 2009. The thing that's extreme, so the timeframes are very different. I mean, that was 18 months where the market was falling. The thing that is very similar, however, is you are seeing a correlation between asset classes that are supposed to be inversely correlated. So you can see equities falling, that's fine. The risky assets, you do expect to see everyone fleeing risky assets in an environment like this. What you don't want to see them doing is also fleeing the world's reserve currency and what is supposed to be the world's most secure asset, which is US Treasury bonds. So we're seeing all those three things happen at the same time. That makes people very uncomfortable. That's not supposed to happen, and it usually only happens in a crisis.
Do you think the selling of bonds that we've seen and those yields spiking as a result is sending a message to the White House, we don't trust you?
That seems to be the consensus. I mean, the general view is the only message that is getting through to the White House is coming from the bond market. The US has to refinance an enormous amount of debt in the not too distant future, and if you've got higher bond yields, you've got a problem. So clearly the message is getting through, but the problem's not solved yet.
Well, we saw huge swings on equity markets of 4% each way throughout the week. How was this reflected in trading activity among your clients?
Yeah, so on Trade, it's really fascinating to see what people do. Everyone uses the term retail investors, but just people like you and me, right? And clearly people are very attuned to what is going on in the investment world and what's going on in equity markets. So we had our biggest trading day ever on Monday, bigger than the pandemic by a factor of about 10%. It was huge. It was largely buying. So the market was off 6% in the morning on the ASX on Monday, and people had plenty of time to get prepared because there'd obviously been a sell-off in the US on Friday. Huge buying, a lot of ETFs, a lot of people just wanting to go along the market and kind of they're dollar cost averaging anyway, so they were just getting their position set, and then also a lot of buying, particularly of materials, a little bit of energy, a lot of materials, thinking they'd been beaten up a bit too much.
We've talked a lot about how expensive stocks have been both here and in the US on this program. I mean, are investors seeing value at the moment?
That's a really tricky question. I think what's really important to note, particularly in the US where the data's really very good, is that the PE on the S&P 500 is still close to 20 times. And that is on forward earnings, which are a 10% uplift from last year's earnings. That's extraordinary. If you see a pullback in earnings, the price differential you're going to need to see in order to match that, just even to maintain the PE, is going to be a massive contraction. So it's pretty scary to see PEs at this level, even when markets have pulled back as hard as they have. And that's because earnings estimates were just really strong. They were looking for great performance. We see something quite similar here. So we just haven't seen a massive pullback because earning estimates are quite strong.
We talked about the GFC earlier. I mean, how long do you think this can play out? Where do you see the bottom?
Such a dangerous question. I think the most important thing to note is we started from very expensive equity markets, particularly in the US. US exceptionalism was the story of 2024 and into 2025, and stocks are still not cheap. So there is the potential for them to fall quite a bit further, and we also have so much geopolitical uncertainty to play out. I think investors, if we look at what our investors are doing on the platform, they are holding a lot of cash, and that tells you that a lot of people are thinking there is some way for this to go.
Gemma Dale, thank you so much.
Thank you for having me.
The wild week kicked off with a bloody Monday for investors globally. Donald Trump's so-called Liberation Day lit the fuse on a $10 trillion two-day rout on Wall Street as traders gave a huge thumbs down to the tariff regime imposed on all countries outside of Russia and North Korea. Rihanna Whitson begins our coverage.
Traders assess deep losses as a sea of red sweeps across the Australian Stock Exchange.
Saw the move in the markets on Friday in the US was one of the sixth worst outcomes we've seen.
It's been a really confronting week.
Good morning. We'll start with that breaking news.
The Australian Stock Exchange has taken a nosedive.
A $110 billion sell-off.
As the fallout from Trump's tariffs is felt at home, the Australian share market closed in correction territory, down more than 4% today, with finance, energy and mining stocks hit the hardest. The rout is expected to continue on Wall Street, which has already lost $9 trillion.
I don't want anything to go down, but sometimes you have to take medicine to fix something.
Global markets have continued to tumble after China announced a 34% tariff on all imports from the US.
We have such a horrible, we have been treated so badly by other countries because we had stupid leadership that allowed this to happen.
He's created maximum leverage for himself, and more than 50 countries have approached the administration about lowering their non-tariff trade barriers, lowering their tariffs.
Markets in Asia also plunged, with Hong Kong down more than 10% and Taiwan over 9%. There's a growing expectation, including from big bank ANZ, that the Reserve Bank will cut interest rates by up to 0.5 percentage point when its board next meets in May, while financial markets reckon there's about a 45% chance of that happening, something even the Treasurer acknowledges.
Markets are now expecting around 4 interest rate cuts in Australia this calendar year.
The chaos on global markets has Australians concerned about their retirement savings.
I'm extremely worried about what's happening in the world today with regards to the stock market.
Analysts say people need to get comfortable with uncertainty.
For the investment style most people are in, there's about 30% in international shares and about 20% in Australian shares. So about half of people's money is invested in equities.
Those concerned are being advised to stay calm.
No knee-jerk reactions are usually the best answer. Trying to time into cash and time out of cash is very tricky to do.
Equity markets hate uncertainty. So until we get some, I think we're going to continue to be in for a pretty rough road.
As investors play the waiting game, as global trade rules are being turned on their head.
Donald Trump may be dictating policy, but cracks have appeared in the White House message. The world's richest man and free marketeer Elon Musk hurled abuse at trade advisor Peter Navarro, saying he's truly a moron. Navarro shot back that Musk is not a genuine car maker, but just a car assembler. The falling out came on another day of wild market swings. Here's Rihanna Whitson again.
Another volatile day for the markets as tariff uncertainty grips Wall Street. We're living in crazy town right now.
A whopping rate of 104% imposed on imports from China.
We were due for a correction, and this is actually really healthy for markets.
Traders look on as stocks on Wall Street take another hit, as hopes of Donald Trump striking trade deals evaporates.
Investors' fingers are on the buy or the sell button based on, what the longevity of tariffs ends up looking like.
What was set to be a good day on Wall Street saw the S&P 500 tumble 1.6%. The tech-heavy Nasdaq composite fell more than 2%.
We're making a fortune with tariffs, $2 billion a day. Do you believe it? I was told $2 billion a day.
Tariff tensions within Trump's inner circle are tipping into public spats. Appearing on CNBC, the White House's top trade advisor slammed Elon Musk over his criticisms of tariffs.
He's not a car manufacturer, he's a car assembler. The batteries come from Japan and come from China. The electronics come from Taiwan.
It wasn't long before the Tesla boss and US special government employee hit back on his platform X, saying Navarro is truly a moron, and what he says here is demonstrably false.
Boys will be boys, and we will let their public sparring continue.
Trump's Liberation Day tariffs have now all taken effect.
Now it's our turn to do the ripping. Right now, China's paying a 104% tariff. Think of it, 104%.
The sell-off resumed on the Australian share market. The ASX closed down 1.8%.
That's really coming off the back of concern around growth in the Chinese economy, because if China slows more than expected, then they're going to demand less of our materials and energy, and that's why those two sectors had some of the largest losses.
CSL stocks fell on news Donald Trump is on the verge of announcing tariffs on pharmaceuticals.
Australia's second largest exports to the US are pharmaceutical products, so that's why there's now concern that they're going to be targeted.
The Treasurer has held an emergency meeting with financial regulators to assess the impact of Trump's tariffs. In a statement, they said they're monitoring developments, and while this period of uncertainty is likely to continue for some time, Australia's financial system is strong and resilient.
The globe does face the prospect of a recession, and it's very unlikely that we'll avoid such a scenario, no matter what policymakers do, interest rate cuts or maybe some kind of fiscal support. So if the globe sinks, we probably sink with it.
Asian markets also fell as Trump's tariffs became reality.
It will get worse if tariffs get higher and there's a kind of trade war unfolding, this kind of tit-for-tat dynamic that does emerge in these situations.
It's hoped deals will be struck. The US president says he's in talks with 70 other countries.
The war with the world, which is not a war at all, because they're all coming here. Japan is coming here as we speak.
In the meantime, whichever way you bottle it, Americans will pay the price.
It's definitely going to impact the customer. It's a sales tax, basically.
As the world is forced to drink what Trump serves up.
By Thursday, in a stunning U-turn, Donald Trump announced a 90-day pause on tariffs for America's trading partners, bar China. Global markets jumped sharply as Mr. Trump justified the decision because, quote, people were getting too yippy. While allies were relieved, a full-blown trade war with Beijing is now the main game, the US president jacking up tariffs on China to a staggering 145%.
After a week of market turmoil, a stunning reversal.
Well, I thought that people were jumping a little bit out of line. They were getting yippy.
Donald Trump using a golf term to explain his decision to pause most country-specific tariffs for 90 days. A 10% blanket duty on almost all US imports will remain in effect.
We don't want to hurt countries that don't need to be hurt, and they all want to negotiate. The only problem is, you can only do so many at one time.
White House officials asserted that the about face had been the plan all along.
Many of you in the media clearly missed the art of the deal. You clearly failed to see what President Trump is doing here.
Stock prices soared. The S&P 500 index up nearly 10%, a gain that would be healthy in a year. The tech-heavy Nasdaq having its best day since 2001. But the stock market is still lower than it was before Trump's Liberation Day plans were announced.
The trade war between the Trump administration and Beijing keeps escalating.
China remains in the firing line. Donald Trump raising the stakes with an even higher rate of 125% after Beijing had imposed more tariffs on US imports.
I'm not worried about retaliation from China. We will stand on our own merits.
The more painful part for Australia will be, it could be that this causes the Chinese economy to slow or enter recession. And there's, of course, as you know, the Chinese buy a lot of Australian products.
While the so-called reciprocal tariffs are on hold, Donald Trump's aggressive posture won't be forgotten. The US has shown it's not a reliable trade partner, and other countries will likely be working to make their economies less vulnerable to an unpredictable leader, a type of conscious uncoupling. The trade turbulence is hurting at home too. American small businesses like this clothing label in Brooklyn left reeling.
We literally have, product that is left
our factories. It is on the ocean right now, on boats. And what we thought it was going to be when it left is not necessarily going to be the price when it arrives.
The 90-day reprieve might be welcome, but the uncertainty is not.
The international rules-based order appears to be crumbling under the weight of the highest US tariffs in a century and an escalating trade war with China. Economics professor at the University of Queensland, John Quiggin, says Donald Trump's whims are essentially a commitment to remove the United States from the global economy. John Quiggin, welcome to the program.
Thanks for having me.
Donald Trump has moved quickly to gut government departments like education and science. It appears the US is being run a little like an autocracy. How do you view America's democracy?
Well, I think it's in pretty bad shape. I mean, Trump has already suggested that he'll take a third term. That was previously a joke. That's now, I think, established policy, and there hasn't been any real pushback from the Republicans in Congress. So I think we can expect to see a significant pressure towards something like a presidency for life. Even if we don't get that, I think the efforts at ensuring that any election produces the desired outcome are already well underway. So there are big problems there. Of course, those are most directly problems for Americans, but that plays out into our relations with countries like Australia.
Is it fair to say we are now in uncharted territory where there are accusations coming from the Democrats and others that the US president engaged in insider trading?
Well, I think the insider trading thing is, of course, somewhat speculative, but we've seen him absolutely extort money from media organisations, law firms and so forth with the threat of adverse executive action. So I don't think we need even to worry about that case to see that Trump and his supporters are simply taking money from whomever they want.
Well, you say the US has withdrawn from a wide range of international organisations, but global institutions like the IMF and the UN and the World Bank are headquartered in the US, be it New York or Washington. Can that continue?
I can't really see how. I mean, the Project 2025, which is pretty much the planning document, certainly calls for the US to withdraw from those organisations, at least IMF and World Bank, and we've already seen withdrawal from a number of UN organisations. So on the US side, they may well push those organisations out, but it's also hard to see how bodies like this can continue to base themselves in Washington when we're moving past a world where, in some sense, the US was a central guarantor of global financial stability, when instead it's a rogue actor essentially disrupting the system as much as it can.
So as the US walks away from the international rules-based order, which way does Australia go?
Well, in my view, Australia needs to free itself from alliances with the US. They were always a mixed blessing, but now I think they're a pure liability in our region. Clearly, our relations with other countries in the region, the ASEAN countries, have repeatedly been made more difficult by the fact that we're seen as a proxy for the US. We were getting, among other things, promises of protection. For example, if we were engaged in a regional conflict, I think it's pretty clear now that should that happen, we'd be on our own. And more generally, a set of shared values that we inherit really going right back to World War II, of a group of democratic countries, of which the so-called Five Eyes countries, the English-speaking countries, were the exemplars. I don't think any of that's applicable anymore. Certainly that's not the way that the Trump administration views things.
Well, this week Australia turned down China's offer to join hands against Donald Trump's tariff policies. What is the choice?
Well, I think the choices are to either to align with one side or the other, or to try and pursue an independent path. I mean, it's worth remembering, of course, that on a smaller scale, China tried the same kind of thing with us, the so-called wolf warrior diplomacy phase, as the US is doing now. In my view, we are best off balancing between the two, not being seen as an ally of one or the other.
Well, the trade war between China and the US certainly intensified this week. How long do you think it will play out, and what will the outcome be?
Well, of course, it's highly unpredictable. The obvious outcome of a tariff that high, when the US has, for the moment, retreated to a 10% tariff, is simply to send all the Chinese goods to some suitable third country, put a wrapper on it and say made in country X, and see if you can get it through. So the US will be making up so-called rules of origin on the fly, I think, trying to say this stuff has too much Chinese content, this stuff's okay. That will go on for a while. I think clearly direct exports from China to the US are just about impossible with that kind of tariff. It's hard to believe that there can be many goods where China can undersell competitors with 140% disadvantage, and presumably we'll see the same kinds of retaliation against the US. That's already happened to some extent in the previous round. Again, China's been gradually walking away from holding US Treasury bonds. We can expect to see that accelerate. A big attempt, I think, from the BRICS countries, Brazil, Russia, China and so forth, to break with the centrality of the US dollar, and I think possibly with the quiet encouragement of the European Union.
John Quiggin, thank you so much for your time.
Thank you.
Gold has been hitting record highs this year, but even the glittering safe haven hasn't been immune to the market chaos. Samuel Yang has travelled to a gold mine in regional New South Wales to take a closer look at the increasingly sought-after commodity.
In the heart of outback New South Wales, diggers are searching for precious metal.
This is where the original ore resource for gold came from.
Hundreds of meters below the surface, drilling for gold has never been more lucrative, despite recent sell-offs.
After 3 decades, mate, this is the best time to be a gold miner. It probably is an unprecedented gold boom or mini gold boom, which may be a function of some of the volatility in the market and volatility in the world. We've also got the Wyoming pits where...
Rod Griffith runs operations at Alkane's Tommy mine. He says they are ramping up production.
Back in the day, obviously costs were a lot less. When we started at Alkane in 2014, we were producing an ounce of gold for about $800. The gold price was about double that. Now we're producing an ounce of gold for $2,200 or thereabouts, and the price is $4,800. So the margins are great.
With global tensions set to continue, gold is tipped to become more valuable. And as the world's third largest producer of the precious metal, Australia stands to benefit. The price of spot gold has hit record highs in 2025, worth more than $3,000 an ounce, or around 5,000 Australian dollars. Analysts from Macquarie Bank say it could go as high as $3,500 an ounce in the September quarter.
Gold is seen as a little bit of an inflation hedge. So if we see a recession around the world, typically that will mean lower interest rates. So we start to see bond yields falling. On one level, that makes gold more attractive.
Rabobank's Ben Picton says the recent sell-off sparked by Donald Trump's tariffs is expected to be short-lived.
Investors who were holding gold were liquidating their positions in order to meet margin calls on other securities, particularly shares.
Before gold is sold on the global market, it's made into bars at a refinery.
These are freshly poured gold bars and they are still a bit hot. And this is the first stage of the refining process. This 140 kilogram gold is worth about $21 million at today's price.
The bars go through further refining to reach 99.99% purity before being displayed for sale.
We're standing in custodian vaults underneath Castle Ray Street in Sydney. This is a purpose-built bullion storage facility, and there's over 10,000 private vaults in the room that we're standing in right now.
The general manager at ABC Bullion says in uncertain times, investors increasingly turn to gold.
A period of uncertainty regarding tariffs and volatility in other assets is actually likely to be good for gold, good for the gold price, and good for gold demand.
While gold has escaped Donald Trump's tariffs for now, there's still been a rush to buy bullion in the US. The price has hit a record high more than 20 times since the US president's inauguration.
There was a lot of physical gold being transported from London vaults into the United States. Investors were worried that the gold was going to be subject to tariffs in the United States.
The rally is also being fueled by central banks stockpiling tons of gold bars. Since Russia's invasion of Ukraine, they've been diversifying their reserves away from the US dollar.
Central banks are wary of holding US dollar denominated assets, and that's because the US dollar is one of the best weapons that the US government has when dealing with some of their adversaries globally.
The US is the largest holder of gold in the world, with more than 8,100 tons held by the US government and the Federal Reserve. But Russia and China are rapidly climbing the ranks.
Central banks have bought over 1,000 tons of gold every year since the beginning of that war, which is double the amount that they bought in the decade before. So I think a combination of more market stress, more uncertainty, and geopolitical tension has been drawing central banks to gold.
An asset miners believe will continue to shine as global trade rules are rewritten.
I think there's going to be plenty of gold mining going into the future. It's a metal that's used in industrial, commercial, and obviously in jewellery and whatnot. It's not going anywhere. People rely on gold. So it's got a good future.
In a world where the global order is being rocked.
And that's all from Close of Business. For more on those stories, you can go to our website and catch The Business Monday to Thursday evenings at 8:45 Eastern on the ABC News channel and after the late news on ABC TV. I'm Alicia Barry. Thanks for watching.